Hello, everybody. Stephen Mead here for Domicile Real Estate for people who love houses. This is our weekly Southern California housing market update for April 6th, 2021. I can't believe we are in April for two reasons. Number one, 2021 is passing by super fast, but number two, because our inventory level does not feel like April at all. So this is kind of an interesting week because, as you may be aware, this was a holiday weekend. And holiday weekends are kind of interesting in real estate. And they can actually tell you a lot about what the market is doing because you can look at how do buyers respond to a holiday weekend versus how do sellers respond to a holiday weekend. And I'm going to get into that in a second. So let's jump into the stats for this week. And then please stay tuned to the end because we have kind of some bonus content this week that I think might be fun. So, okay, here we are looking at our total active listings chart. And the part that speaks volumes is what this chart doesn't say. This is a fairly straight line of active listings. This is not what the world normally looks like. Normally, we see a drop in inventory sometime in January, and then it slowly starts to build up as we go into the spring. And if you look here, in both our under $1 million and our $1 to $2 million categories, you don't see a whole lot of anything. And, at first I thought, well, maybe that's because these charts are just, if you look here on the side, on our axis, we have 2,000, 4,000, 6,000. So, I mean, these are pretty big numbers. Please remember this is for all of Los Angeles and Orange counties. But even still, you would expect sort of a long-term trend line, and it's just not happening. We're just not seeing it. I mean, this represents over 3 months of data, and look at how flat these are. Aside from a bump in the beginning of January, there's not really a lot going on, and that should tell you something about our market. We're almost kind of stuck in this sort of groove where we just continually have a lack of inventory. And what is that doing? It's doing exactly what you'd expect, which is pushing up prices. But before we get into that, I want to talk about sort of reconciling our supply and our demand for a moment. And there's a story here because this is a holiday week. So if you look, this is our 14 days of new listings. And so one of the things that you notice about this chart, right, is if you look here, you see that both in our under 1 million and in our 1 to 2 million category, a little bit of a reversal in the number of new listings, right? Now, part of this is because it's a holiday week, right? And that explains a good portion of this in our under $1 million category. You see here, we actually had a slight rise in new listings for our 1 to 2 million, but I would call that generally flat. What's interesting is this, and I'm going to say it twice because I think it is super important. Whenever you have a holiday weekend, whichever side of the business and whichever side buyers or sellers has the leverage, that tends to be the side where you will see a decline during a holiday week. And here is the reason why. If you are a buyer in today's marketplace, right, which is very heavily in favor of sellers, if you are a buyer, your viewpoint is you cannot afford to take a week off, realistically. Now, that doesn't mean every buyer thinks that way, but on the whole, buyers will generally think that way in the market, that if a great house comes up, they want to see it, even if it were Easter Sunday. Now, if you're a seller, though, and you are in the position of having more market control, you're going to take the attitude that it doesn't really make that much of a difference to you and that you can wait because the buyers will still be there next week. And if you don't want to show your house Easter week, you don't have to. So if you look at this chart here, which is our new listings, that took a pretty noticeable dive here in our ultra competitive under $1 million price point. I mean, we are retreating back to where we were towards the beginning of March, right, in terms of new listings coming up. Now, I do think this will rebound a little bit next week. So I do think there will be some change in that, some little bit of a reversal next week. But if you look, I mean, by and large, it looks like, some sellers took the week off. But if you go back here to our new escrows, this is really interesting because on one hand, yes, we see a number that's lower, but that's very gently lower versus last week. I mean, barely any change. So a slight drop off, but not a huge one. But look at where we were in terms of new listings. So what does this tell us? This tells us that sellers felt like they could take the weekend off and buyers really didn't. The buyers stayed out there in the marketplace, kind of reinforcing sort of what type of market that we are in. If you look down here for our 1 to 2 million, that's a much steadier range. You'll notice just in general, there are fewer fluctuations, but you also see that had a slight downturn as well from last week to this week. It was, of course, a holiday weekend. The other thing this tells me is that, we really are running in a very inventory constrained market. Buyers simply said, we don't care. We're just going to put offers on whatever we can to try to get something and look at this as maybe our chance to do that. So if we reconcile our supply and demand together, we come up with our absorption rate statistic. And our absorption rate for under 1 million has gone up. And, we've talked about this time and time again. Anything above 80% is a very competitive market, and anything above 90 is a hyper competitive market. In that under $1 million category, I mean, we are just really skirting with that 90% mark. We've been pretty close to there, but if you'll look, you've seen actually the last 2 weeks, 3 weeks, we've really kind of seen a run up in this. If you look here, you'll notice that we've really seen that this has gotten more competitive. Now, we did see a little bit of relief here in terms of if you're looking at our 1 to 2 million, but look at the big picture, right? If we are going back since the beginning of February, I mean, we are pretty much right in line. We haven't seen big swings in this number. So, I mean, I'm curious to see, is this trend going to continue? Maybe that says something, right? If our upper end market continues to get easier, but our lower end market continues to get more competitive, that might tell us something about what the market's doing. But I think it's a little too early to call on that. I don't think there's really a lot we can glean from that, because what we've really done is we haven't so much dropped as just kind of avoided this hump that we saw over the past 3 weeks or so. We're just pretty much back to where we were. So if we look at our closed prices, and again, I want to let you know that this data is 4 to 6 weeks old, because this is based on homes that closed, which means people negotiated these transactions. They negotiated these transactions 4 to 6 weeks ago. But if we look at that, I think what's interesting is this: all of our categories are showing price growth. And if you look and you extrapolate a trend line, right? We're seeing an upward trend across the board in both our entry level 25th percentile, our median price area here, and then our 75th percentile, which is really seeing some pretty big gains. I think it's not accidental that the biggest gains are really seen in this sort of middle of the market. I think this is the market that's kind of squeezed in between, right? And here's why I think that that's happening, and why, if you're in that sort of near the median home price, you're really in the meat of it. I think raising interest rates. I'll go off screen share here for a second because I want to use hand gestures. If you look at the entry level of the market, right, these are people that are first time home buyers. These are people that are not coming in with a huge amount of equity typically, right? Like, these are people making lower down payments. This is the group of buyers that is going to be most impacted by rising interest rates. So, these are people that might just be qualifying, and if rates move up, that qualification starts to become, starts to go in question. Our middle market, right? And if we look back to our middle market for our LA and Orange County median, I mean, this is somewhere in the 800,000s is our median price. I think I saw the stat in Orange County, the median home price is $820,000, which is pretty amazing. But if you look at that, I think what many of those buyers are going to be move up buyers. So these are people that may be coming from equity, right? They had a condo, they've been able to sell that, and now they're going into something more expensive. That range is very competitive, because the problem is the sellers in that price range, they are jumping up to the really expensive properties, right? And they might be afraid that they're not going to be able to get something, and that those prices are rising too fast. So in this middle, you kind of have this sort of, kind of this bit of a Jan Brady sort of an issue, right? And where you're kind of stuck in the middle. And I think that's the reason why that price range is starting to look super, super competitive, because really that's the crossroads of not enough inventory and way too many buyers trying to come into the marketplace. Going back into our screen share here, if we take a look at our percent active after 14 days in the market, this one, right, is, I think this one is influenced by our holiday a little bit. And the reason why we're seeing sort of jumps in this percentage across the board. I think this is short lived. I think we're going to see this turn, because this measurement looks at all the homes that came on the market in the last 14 days and whether they are still available for not. This is the stat that is most influenced by homes that may have come onto the market right before the holiday period. So this might be artificially skewed upward just a little bit because we're in a holiday week. Finally, or not finally, but looking at our list to close ratio, we see a little bit of relief here in our under 1 million category. But I mean, let's take a look at the absolute numbers. What does this say here? This says that for both under a million and in our 1 to 2 million, the average transaction, right? That means some will be more and some will be less, but the average transaction ends up selling for 3% higher than its list price. That would mean on a $1 million house that the average $1 million list price home is selling for $1,030,000. So, this is definitely a market where, if you are a seller, barring doing something stupid, you can probably be a little bit more, you could reach a little higher in your list price than you are. And if you are a buyer, it means going in and lowballing a listing is probably not going to happen unless it has been on the market 6 months. This is just not really the market to try to do that with. Of course, I'm probably telling you something you already know. If we look at our days on market for new contracts, this is pretty interesting because, we see things have finally leveled out a little bit for our under $1 million contracts, but they've leveled out at 20 days, which really is it's just a tiny number. And the way this is calculated is, and I've said this before, our MLS system continues to accrue days on market while buyers are sort of in their inspection period. So as long as they are considering backup offers, that days on market still tends to accrue. So what this means is on average for listings under $1 million, that means the property went on the market and they went through their inspections and release contingencies. So, 20 days is an extremely short period of time. And what we see is that our 1 to 2 million, I mean, look at these trend lines. Look at where we were at the beginning of the year for both of these figures. We were right around 50 days for our 1 to 2 million and right around 33 days. And just look at the trend line and what has happened to these numbers. I think there is a question of how low can they go. There is absolutely a floor for this statistic, and I believe we're pretty close to it. I think this is, in reality, this means homes are going under, they're getting snapped up under contract within 7 days on average. That's what this really means. Finally, we have our affordability index, and this is a trend line moving in the opposite direction, right? If we go back here to June of 2018, and we look at what is the payment on a median priced home, we actually see that pretty much from 2018 to February of 2021, you were getting a discount. And then we've seen into our new year 2021, that combination of interest rates and rising prices has landed us at 115%. Now, as I've said in the past, this isn't really a reason to be alarmed, because remember, 2018 was now almost 3 years ago. We would expect some inflation to occur. And also, I believe there's a lot of value in the long run of buying a home with a very low 30-year fixed rate interest loan. And what my point with that is, if you got, I don't know if we will ever see a period like this again, or how long it will be till that comes back. So there's kind of a long-term value of being able to have a mortgage that is even in the threes, which of course sounds high today coming off of 2020, but in the grand scheme of things, a mortgage in the threes really is a sort of long-term asset because if inflation comes back, that means you are pay. There may be a situation where the interest rate on your mortgage is 3.5%, and the interest you get on putting money in the bank is 5%. That's a very real possibility, I think, in the next coming years. So I promised a little bit of bonus content today, and there's a question that's come up a couple times, and I'm gonna read here. So this is Jim who sent this to me. So Jim, if you're listening, we're doing your question, and it says, "What do you think of appraisal waivers?" So first, let me explain for those of you out here what an appraisal waiver is. In our standard contracts here in California, you have a period of time by default that you are able to get an appraisal on a property. And if it does not appraise, you could back out of the contract and get your deposit back if you're a buyer. And if you're a seller, it means if it doesn't appraise, your buyers can get out of the sale. And what an appraisal waiver is it's exactly what it sounds like. It is where the buyer is waiving that right. They are saying, you know what? We don't care what it appraises at. We're buying it anyway, no matter what. So I'm going to give you a little bit of a caveat. So I'm going to talk about what an appraisal really means for both a buyer and seller. And in my opinion, it's not really all it's cracked up to be for either party. And I'm going to explain why. So if you are a seller, an appraisal waiver sounds like about the best thing that a buyer could offer you in a market like this. And at first glance, an appraisal waiver really is a good thing, but there's a couple problems with appraisal waivers that I'm going to explain here. The appraisal is not the only reason that a buyer can back out of a transaction. So the perception, if you are a seller, is that this is ironclad, and no matter what, these people will be pushing through this transaction, no matter what it appraises for. But here's the problem. Our standard contracts in California also allow a very, very loose and generic inspection contingency. And that means that any kind of due diligence you do about the property itself, anything you discover, there is no reasonability standard. A buyer has the ability to back out. So examples of things that would qualify for this, things like the buyer mentions that they don't like the sun exposure in the afternoon at the property. It is too sunny on the backside of the house. That would be a valid reason, and they would get their deposit back. So because of that, in this very competitive market, even if a buyer waives their appraisal rights, you could be into a situation where they back out for another reason if they discover that the appraisal does not come in at the value they were hoping for. So it's not really an ironclad thing, even though they will pitch it and make it sound like it is. Now, if you're a buyer, what happens when a property doesn't appraise and you've done an appraisal waiver and you have no other way to back out? Well, the problem with that is it means you must come up with the difference. And I'm going to use a numerical example to illustrate that. So let's pretend for a moment that you write an offer for $1 million on a property if you were a buyer, and that property appraises for $900,000. So, and you were planning on putting 10% down. So what happens is your lender doesn't tell you can't buy the house. In fact, quite the contrary. They say, you are fine to buy the house, but here's the catch. We were going to give you a 90% loan on $1 million house, which would have meant a $900,000 loan, and you would have been putting $100,000 down. If that property does not appraise for $1 million and it only appraises for $900,000, this is what the lender says. They say, well, no problem. We will give you a loan for 90% of $900,000. So what that means is instead they say, well, we will now give you a loan for $810,000. Or approximately $810,000. We will not give you a loan for $900,000. So what this means is that you have to come up with the difference. And I think in this market, something that I'm seeing that I think is very troublesome is that a lot of agents are not accurately explaining to their buyers what risk are you taking when you write an appraisal waiver. And my preferred method of doing this when I'm representing buyers, if at all possible, is to write what is called an appraisal underage. And what that does is that says, okay, we're not going to back out as long as it gets pretty close to our contract price. So for example, in that situation, we might say, well, we're not going to waive appraisal entirely, but we will agree to buy the house as long as it appraises for at least $950,000. So that way we're saying we're only going to have to make up an extra $50,000. That way we at least know what kind of risk we're taking on. Anyhow, you guys, thank you for watching. Do not forget to like, subscribe, hit that notification bell if you are watching on YouTube. And we love questions and comments. If you want us to do your question in a future video, you can definitely email us, you can call us, you can text, or you can put a comment in on the YouTube videos, or comment if you're watching this on Facebook. Anyhow, we love you. We love helping buyers and sellers in Southern California. Definitely stay tuned for our first time home buyer video, which will be coming out on Monday. We will see you very soon.